Let's Talk About It podcast is sponsored by Goosehead Insurance, servicing clients all across New Jersey. What's going on? It's Jimmy Mortgage. How are you, Angelika?
Good. How are you? Thank you for having me.
Of course. Welcome to Let's Talk About It. Again, I'm your favorite lender. I'm here with Angelika. She's also a mortgage professional. And we're going to be talking about the different nuances that I do that she does and how we still come together on differences when it comes to mortgage related stuff. Because at the end of the day, it's all about our clients, right, Angelika?
Exactly. We want what's best for you guys. So
there it is. And at that point, you are with a big bank. That's what we're going to call it. Big bank, right? Can you talk about some of the different things that you got going on at big bank?
So like the difference between like working at a big bank and of course what you do is I have very strict guidelines. I'm very by the book. I do have like competitive offers. Mm-hmm. It's just, like not everyone qualifies for big lending institution financing.
Right. So would it say that your niche is a little bit more on the higher end when it comes to giving out loans, or I'm not right? Maybe there are other things you can do that I can't do.
I mean, in all honesty, I can't say that. I mean, our specialty is like the higher price point clientele, but that doesn't mean we can't do, let's say the lower loan amounts. Right. But there's different lenders and different lenders have different specialties. Right. So in that instance, it just depends on someone's profile. Like sometimes like a big bank would be a good fit and sometimes a broker or a smaller institution would be more fit for that individual.
To give you an example, right? When it comes to non-QM products, that is a niche that we do very well at. And that's something you guys do not focus on. That's where you and I come in when we have these conversations where if I'm not able to provide that better rate because of that great profile that person has, I can say, hey, Angelika, can you help out my client? Because at the end of the day, we want our clients to win, right? Whether it be you and I, we just want them to get the home. And some clients, they protect the rate. It's all about rate, nothing else. And then also there are different things like adjustables that you provide too, which
But I don't think that the rate is the most important part is the thing. A lot of people, they just are so fixated on the rate that I feel like it's not like, do you want the home or do you want the rate? And then have a deal not go through because, hey, you were too focused on the rate versus qualifying for the loan. Right.
And that's a conversation, right? And that's why I wanted to have you on Let's Talk About It, because I feel like, rate is a conversation, but there are other parameters that make up what's important for you to obtain this home. The bank that you work for, they also have great products that are available for first-time home buyers. Correct. So, that's available and it's some money that's given and you don't have to pay it back.
Correct, yes.
Right, and in some cases, that's important for someone who don't have enough, but that bucket allows them to, absorb some of that closing cost, right?
Of course, yeah.
So that's the good thing about with some of the big banks, right? Because they can offer that. And also too, some people are just stubborn in their ways. They just want to talk to someone who works at a bank, right? Mm-hmm. Because, the institution is on an avenue. You see it, you're comfortable with the name. And when it comes to making purchases that big, it is what it is. If you feel comfortable knowing you see a couple of names on the strip that you walk back and forth to, you're more inclined to say, look, I'm going to give that big bank a call, right?
Correct. Yeah. However, then people have the wrong impression that if they don't qualify with the bank, that they just can't get a mortgage or there's not specific products. Like, I hate to say this, but a lot of people in our industry don't know how to give people all the information. Right. So if, let's say, a client doesn't qualify with me, which is why we work well together, it's not like I'm sending them, hey, I can't help you, goodbye, good luck, you don't qualify. No, it's, hey, you still have these kind of options in purchasing your home and making your home dreams come true. Like, it's not just, again, like, you just have to know the industry. You have to know people's qualifications. Big banks, it might not work with them, but there's Jimmy over here that has a lot of special products where you can get more creative. Mm-hmm. So yes, it's convenient, but I don't know if that's the right approach for people, just to go with the banks because it's convenient.
And this is why we having this conversation, right? Because again, every individuals have different needs. And the good thing about what we do, we have a la carte, right? We can customize certain things within our guidelines, of course, to give you that that mortgage. Again, I'll go back to, like, we have bank statements, we have asset depletions, we have verification of employment, where one applies for a mortgage if they get a VOE from that employer. We can help with that. Interesting loan that I'm working on right now, where it may not work at where you're at, but for me, person went from W-2 to 1099, and they have not been 1099 for a year.
Oh, wow.
Right. So that would be a constraint on, like, we can't do it. But in my world, we're able to do it because we have certain funds that allow the client to jump into this relationship, and we're able to give them a loan. The difference between you and I is that I have some a la carte advantages, where you have some rate advantages, especially when it comes to relationship banking.
Correct.
That's important. So when it comes to that part of it, how are you dealing with the market today, right? Because I don't want to make it about Jimmy versus Angelika, because we're both, we both provide professional services, but at the same time, we have a specialty that caters to some. But I wanted Angelika here because I want the conversation to be had. What's the differences, and what is she seeing versus what I'm seeing in today's market as home affordability becomes, well, not becomes, is a concern when it comes to purchasing a home. So what are you seeing today with your clientele that you work with on, what does that look like?
I mean, I think in general, people, because of the rate increases, people's buying power has decreased.
Right.
However, people still want those, high-end homes. People still want, what they want.
Right.
It's a little bit tougher to qualify people within the certain brackets, but at the same time, people are still buying. People are still, making these kind of moves. But, with the rates falling, it's giving people more buying power. So I think that people are still making these purchases.
When we say the rates are coming down, at one point rates were over 7%. And to what Angelika was saying, there was constraint, right? Because the buying power got limited. However, home cost was going higher. And so whether it be the top notch of those who can afford it or the bottom who can't afford it, it still has a compounding effect, right? Because if you limit your buying power, your DTI becomes greater, and it doesn't put you in the bucket till you afford the home. And so with the rates coming down a little bit, and we're having this conversation, it's the second week of September, so things can change, but I just want to make sure we put that in quotation, because this is going to be coming out in October, but we want to protect what's going on in today's rate environment. We're in the 6s, and if you go to some adjustable products, you're in the 5s. I got that in there. But what conversations are you having with some of your partners? And to be very clear, she's servicing all 50 states, right? And most of your business comes from New York, New Jersey, Connecticut, and California, Pennsylvania, California. So what conversations are you having with those on the West Coast, right? Because we just went over, we just had a catastrophe with some of the wildfires in the Palisades. How are you having those conversations with your referral partners on that side of the country? And what conversations you have with folks within the tri-state area?
I mean, I think business in California especially has been a little bit tough. It's been tough because of everything that happened, but I feel like things are picking back up again.
Right.
A lot of people are still buying. The one thing I know in California, I know that people, are still buying the houses that they want. And then I'm talking to them every single month because something's happening with the rates and drops, refinances. So they're even happier because their monthly payments are decreasing.
Right.
And I feel like here on the East Coast, it's kind of the same situation, even though there's no catastrophe, nothing really happened out here. But people are still buying, not as many as before, but a lot of happy people are coming around because rates are dropping. So again, they're saving more every month, which again, it's like a roller coaster with these rates.
Right.
I think that lately, within the last few years, there haven't been that many listings on the market.
Okay.
So, the buying power is limited. So everyone can increase their their price ranges because there's so many buyers out there.
Right.
It's just been so interesting. I don't even know what to call it because I just want it to change. I want everyone to buy their house. I want everyone to.
Right.
I don't know.
Let's Talk About a Podcast is sponsored by Molson Law LLC, servicing clients all across New Jersey. You think about it, right? Everybody wants to own a home, but not everybody deserves the right to own a home, right? Because of the fact that you may not be able to afford it. And that's what Angelika's appealing to, because of the fact that with the high rates, it has slowed down certain things. And even those who do well, at the end of the day, those who do well do not like using their own money. If they can borrow at a discount to get what they want, they're always going to take advantage of it because of the loopholes with taxes and everything else, how they allocating their funds. So we're all feeling this. So when you see someone talking about only the rich can afford it, I guess in your mind, but the truth of the matter is rich people like to borrow too, right? And if they're borrowing at a low cost, they're just enriching their currency. So it's an effect all around, right? It's safe to say.
You make a good point because what you just said is the more, let's say, wealthy, they 100% borrow.
Yeah, they're buying in, right?
When someone tells me they're paying all cash, I mean, even at the high rates where they're at now,
right,
they're still getting loans.
Right.
Like, they're not taking money from their own pocket.
Right.
They're still borrowing money in hopes of changing it in the future.
And one of the things also I wanted to talk about is what's some of the things that you got going on when it comes to, because I lean on you at times when it comes to condos. One of the things that you guys do well at is because you have portfolio relationships, whatever you want to call it, with some of these in the New York City area, pretty much, right? You have those affiliations. Sometimes going through you makes sense. It's not even about the rate. It's the fact that because you have those relationship with those cooperative board members in the New York City area, you're able to get the loan approved quicker. Right. Also having those conversations with your referral partners in New York City, Manhattan, Queens.
So in New York, you have condos and you have co-ops.
Right.
So those go through their own process of getting approved. Like, we have to make sure that they're in good standing. We have to review their financials, budgets, insurance, everything, because, God forbid something happens, like, we don't want you to be out of pocket for all these costs. If something happens in the building or the building is sued, you're sued too.
Right.
So we have to make sure there's no lawsuits, no litigations. Again, there's just so many things that we review. And then we, communicate that with you. If that's, even let's say if the condo or co-op is approved, you still have to make the decision if that's something that you want to buy.
Right.
Because again, this is your liability in the future.
What's happening today, right? Again, the reason why I'm saying big bank, because relationships are important.
Well, we have a database.
We have database. You have a database, right? Right. And that's key because just because in some cases I may approve you for a mortgage, but the co-op may not approve you for the mortgage. And so they may say, look, here at where you're at, we're not going to take you. But because you have a footprint in the metropolitan area, Manhattan specifically, they're able to get that mortgage under your umbrella. And that's what I want many to understand, right? Because when we're getting mortgages, it's easy to say this is what it is and this is what it is. But especially when it comes to condos and co-ops, Jersey City, metropolitan areas, California, some cooperative boards have relationships with some of those big banks. So in some cases, I may not be able to do the mortgage where I lean on Angelika and her team to help facilitate the client's needs when it comes to mortgage. So I think it's important to make note that getting a mortgage, in some cases, it is simple. It's not hard. But for those who have complex living situations or more money than others, sometimes it makes sense to go the big bank direction. And those who have interesting things going on with their income or how they perceive this cash flow, it may make sense for me to be doing the mortgage. But at the end of the day, we want the end user, which is the client, the borrower, to get what they want, which is the key to their shelter. And that's the conversations that I'm bringing to you guys, because, again, though we work for two different teams, at the end of the day, our relationship is ongoing, because what I can't do or what she can't do, we come together and provide services for I'm going to call services, access to lending, right? Let me be careful, because services, like, what the hell does that mean? Like, access to lending when it comes to one getting the key to their shelter, right? Mm-hmm. Is it fair to say that?
I'd say so.
So we're speaking, yeah, I say so. I'm making it easy. So we're in the second week of September. Next week, the Fed is speaking, third week of September. And the notion is the Fed is going to cut the rate. And I feel like I want to stress to you, yes, Fed has correlation to what's going on with the bond market. But the truth of the matter is, bond traders are in the world of making money. If the data does not support certain things, I promise you they're not going to be buying the bonds, which has correlation to mortgage-backed securities, which is backed by the loans that Angelika and I provide. So again, we're in the second week of September. This episode is going to come out in October. But given what's going on with the 10-year that we use to follow to price the MBS that we provide to you when it comes to lending, is it fair to say that the bond traders are ahead of what the Fed is going to be saying next week if they do decide to cut the rate? Now, the conversation is they're going to cut it, but I want to be careful with my word choice, because I don't want that snippet to ever come out. Jimmy said they're going to cut the rate. I ain't say that, but it's perceived that the rate is going to get cut. But what Angelika and I are trying to tell you is the data is priced in, because the more bonds are bought by traders, the cheaper it is for you on mortgages, right? Is it safe to say that?
I mean, I wouldn't wait for rates to come down, because, again, a lot of these big lenders and other institutions, they already adjust their pricing, kind of assuming where the rates might go or what might happen with them. I mean, yes, the 10-year treasury yield, like, it's a good base point for us to follow to see if they're going up or down. But there's so many things going on in the world right now that could affect that.
Right.
Along with the Fed meeting, people are like, oh, the Feds are meeting. Okay, so what? I mean, what kind of news are they bringing us? Good news, bad news? Like, are they going to say something that could drive rates up and down? Like, we just don't know. We hope that they go down, just because we want happy clients. But other than that, I mean, it's, like, when it comes to rate drops, I'm conservative. Like, I wouldn't wait. If you're happy with the rate, it makes sense. Don't wait for them to drop again the following week.
Right.
If it does, then we'll approach it and we'll figure it out. But right now, if it makes sense for you, just go for it.
And I want to stress the fact that if the rates do come down and we've locked your rate, Angelika and I, we do have a float down option to give you the better rate. In the end, we want you to save as much as you can, right? But at the same time, we want to protect what you have, because something is better than nothing.
Correct.
Right? Especially when it comes to refinancing, right? We've seen the cost of groceries, insurance, taxes, utility bills go up. And we know that in certain income levels, it's not keeping up. Mm-hmm. And so our goal is to give you as much savings in this process, so you feel comfortable knowing that you're not stressed with your financials as you continue to make your monthly obligations. So again, to be very clear, the Fed is, it looks like they're going to cut, but the truth is bond traders make that decision because we live in a capitalist society. If there's an opportunity for one to make money, they're going to do it, and you're going to see it in the data. The smoke screen is like, oh, Fed, he's going to say this, he's going to say that. I promise you again, as a portfolio assistant, when my days at JP Morgan, it's all about the bond. It's what these guys are doing and how they're making deals, going back and forth, negotiating what price is, and in the end, monetizing the bank's portfolio and their portfolio, right? Mm-hmm. So if we see they're buying more bonds, that means rates will be cheaper for us.
We hope.
We hope.
We hope.
We hope, right? Let me be careful with the language, right? Because we don't want nothing coming back to us, because both Angelika and I, we work in a world where we heavily compliant, and we want to be careful with our words, because we don't want nothing coming back to us and saying like, these two mortgage professionals said this and we're going to use that against them. No, we're just speaking in generalities. As always, if you're looking for more detail with APR and the cost of what it's going to be to get the mortgage, you need to call us individually to make sure you get the appropriate information, and also through email, right? Because then we're controlling those conversations, and we're not putting you in a situation where you're uncomfortable. Again, This is a big purchase, and we don't want to put you in a situation where it comes back to us where we said this, but this didn't happen. And that's why we're being very careful with the language that we're speaking of today on Let's Talk About It. Again, we're professionals when it comes to lending. We love lending. We want to always provide our clients the best option under the current circumstances. But at the end of the day, we do too, as professionals, because this is our living, we have to protect the language we speak to. So each individual has different cases. This is why myself and Angelika, we communicate through with all our references with NMLS number through email and chatter through communication to protect the interest of you and those who we work under. Is that fair to say that?
Yeah, 100%. Yeah, going off of what you're saying is every individual has a different loan to value, credit score. So it's not like you see a rate online and you think that's the rate that you're getting. That is not accurate. Every interest rate is based on one person's specific scenario. And there's different ways to structure scenarios as well. But majority of the time you're online, you see a rate of, I don't even want to say, but let's say it's a low rate that's too good to be true. It most likely is too good to be true because it comes with costs or comes with points. And then, you know, I have a client come to me and goes, Angelika, I found a rate of 2%. I'm like, tell me where you found it because I want it too. Right. Because it's just not realistic. So, you know, what you said, it's correct because people really need to tell us the information and their scenario, and then they'll get accurate information.
Let's Talk About It podcast is sponsored by Real Estate Title, servicing clients all across the state of New Jersey.
Let's say you get a loan estimate. What you have to look for, okay, title, escrow, attorney fees, that is never going to change. That is pretty standard no matter like who you're going with. Right. But when it comes to lenders, you have to watch out for those points. You have to see if you're getting any credits, you have to see what the origination cost is, the broker fees. Like there's so many hidden fees that you have to watch out for. Right. And you really do have to trust the person that you're working with. So a lot of the times, let's say, for example, a client wants to go somewhere else. And then right at closing, they're like, hey, like, where's this $15,000 cost coming from? And they didn't disclose it before. And it's, you know, I hate to say it's a very nasty business. Right. But again, that's why you have to work with people that you trust.
Right. And to her point, right, again, you can make up things, but at the end of the day, when you catch that aha moment, I didn't see this number from you didn't say it in the beginning, you didn't say it in the middle, but at the end, I have this large sum of monies and I'm responsible to come up with it. And now you become uncomfortable because now it's like, you need to come up with that money because there, in some states, there's some legal ramifications if you can't close on this property because they may hold your deposit. So to the conversation that we're having, it's very important when you get this important piece of document, it's called the loan estimate, to understand and ask as much questions as much as you need to make sure that you're getting appropriate value behind it. Because what you don't want is surprises at the end. And to what Angelika is saying, there are a lot of things that make up the loan estimate, but there are certain things that are fixed cost within the purchase of a home, and it's called closing costs, right? It's different from your down payment. I just want to be very clear. Your closing cost is different from your down payment. There's a fee to pay to do the loan, and there's a down payment that reflects what you're going to borrow, right? That amount that you're putting towards the purchase of your home, and then that borrow amount is what we do interest on.
Correct.
So,
yep.
Yeah. So, this was important for me. I asked my friend to come on so we can, again, elaborate on some of the things that are happening in lending and some of the malpractice that does happen when it comes to lending, right? To know that whoever you work with, make sure you ask enough questions and feel comfortable with that person. As always, we prefer us, but it's all good. But there's enough room for all of us to do well and provide the value that we talk about when it comes to lending, because Angelika and I, again, we love lending. Angelika, you have anything to say before we go to the end?
I mean, here's the thing. You're very good at what you do. I do believe I'm good at what I do.
Of course.
People should check with us anyways. If you're not sure, call us. Ask us these questions. We're happy to help. And you know what? If that's something we can't do, we'll let you know. And there's no hard feelings. We can't help you now. We'll help you later. It's just, it's an interesting business, but we're always happy to help.
Good. On that note, find us through whatever platform seems fit for you. But again, Jimmy Mortgage, your favorite lender. I'm on all streaming platforms. Just type in Jimmy Mortgage. Let's talk about it. I'll be there to provide you for your services. Again, in the end, we want most to have shelter. And that's why we do what we do, because we love real estate.
Yep.
All right. Thank you so much, Angelika.
Thank you for having me.
All right. Hey, listeners, are you looking to improve your home comfort and save on your energy bills? Let's talk about Seal Power. They've been awarded Energy Star Sustained Excellence Award, seen on Good Morning America, the New York Times, and World News. Seal Power is dedicated to keeping your home cozy while saving you money. Check out their website for tips and incentives and more at CIELPOWER.com. Stay comfortable and save with Seal Power, where comfort meets efficiency. Follow them on Instagram for updates and more, and let's talk about it as well. Thank you.